masterclass workshop for waterfall income. We just wrapped up after going about, I don't know, 100 some minutes strong from 1:30 p.m. Day 2 was a lot. Great feedback. Awesome strategy. Happy to dive in and deconstruct the strategy today. Trades are looking actually really good for waterfall income. We got 3 of our 8 looking good for profit. We got other ones in the works. Today, daily profit play went another 3 for 3 with the alerts we called out. Bear call spread combo, a couple of standard daily profit plays. Lots and lots of volatility today, which was kind of crazy for an FOMC. It's right before Jackson Hole. That's why I thought it'd be timely to go Jackson Hole, signal, or noise. All right. I don't know. Market can do whatever it wants. Okay. I'm going to keep focusing on approaching the market day to day, doing my thing, trying to grind out some daily income, position my portfolio to make sure I'm managing risk the right way, give myself a nice room for error. If we have a spike in the VIX, if something happens where I still think the corrections are underway, all these things line up. So, what is Powell going to say on Friday? I don't know. I don't care. I really don't. All I know is that day to day, I can manage risk. I'll calculate my highs and lows. I'll calculate what I think the market could do on a day-to-day basis. We'll look at the VIX. We'll get our levels and we'll trade accordingly. So I wanted to show this. I posted this in Telegram just now. So we've got some, pretty crazy levels. Like this thing was like down here off of the 6450. I want to ask, I wonder if Tom, I think there was a gentleman's named Tom this morning in my morning session. I'm going to give him a shout out tomorrow. Tom's like, should I take the 6350? And I'm like, are you picking the bottom right now? And it actually worked out. 6350 was the bottom. But what were some of the probabilities? Well, we started out with a little bit of a press lower and we aggressively slid. Like we slid like 55 points this morning and we hit the 50% ATR. We hit the 100+% ATR. I mean, we darn near stretched like almost 150+% ATR. The plus minus on the day was about 27 before we had opening bell. Opening bell was like 22. Market makers have done an incredible job today of defending all of the noise. We were down, we're back up, we're pretty much flat on the day. Now, I don't think this really changes anything going in day to day because I think we're rolling over a little bit. If this market breaks this type of structure and all this was down on the day, little correction, little correction, little correction. If this rolls over again and breaks the trend line, then there's clearly pressure to the downside. The market sells off more. Okay. Look at where we are for the trend line break. Okay. This is what could be a pretty clear market manipulation level. If we are breaking this trend line, I see this happen all the time in futures and currencies. Let's see what price action gives us. If I go to the break, so we had support right here. We had support right here. We had support right here. Price broke the trend line and fell. To me, this is where the bears finally had permission to say, I think we've got the upper hand. So we slid down. Now the market pulls back. Okay. And this may not be foolproof. This might be noisy. I could be dead wrong. But taking this high to this low, okay, I wouldn't be terribly surprised. Right now, we're trading around the 38% fib from this high to low. As long as this market respects like a 38, 50, or 61% fib, I think this is where the bears and the sellers would defend. And we'll see if this comes back down to the same lows again and possibly lower in the next maybe week or so. We have to get through Jackson Hole on Thursday, Friday. It's a 2-day symposium. It's going on all weekend, I believe, as well. Lots of noise. Powell speaks on Friday. Next week, we have NVIDIA earnings. I think everything in the markets right now are priced to perfection. We've had a lot of earnings. We've had earnings growth. It's been tech heavy, double-digit growth. Everyone's all excited, but it's a little overextended. Technical suggesting that the market should be pausing or maybe pulling back a little bit. Okay, so if we just go sideways, that's fine. If we end up breaking fresh highs again, that would be a little weird. NVIDIA all by itself is probably capable of moving the market anywhere between like 0.5 to 2% up or down based on the NVIDIA earnings. If we take a look at that chart, NVIDIA was right below the 21 period moving average. I mean, if we're going to carve out a high, it could be very noisy here, right? It doesn't mean that we just automatically like go straight up and then fall straight down. If we go sideways, okay, this market might break a little bit and then find dips at a better price and then buy the dip at a better price. So, I mean, if we have like, okay, one day down, a little fight day right here, and the market proceeds to retest the highs, I think it still fails at those highs. It wouldn't surprise me if NVIDIA is going to play out a lot like Microsoft did. if it blows out expectations, but it's like an exhaustive earnings gap and the market gaps up and then fades. I mean, Microsoft is down 9% since its pop in earnings. So I could see Nvidia doing the same thing where maybe it gets back to the highs, maybe it goes through the highs, but it's an exhaustion gap and we just come back down again. So I think if we're going to be noisy on Nvidia and noisy on mags, noisy on the S&P, it's just a lot of what I've done. I talked about this a lot in my session yesterday. If it's a low and a high, I'm just looking at 50, 100, 144, 200 previous all-time highs, just a pullback window. That's all it is. That's all it is. So a pullback window, I think, is due. I just don't know if the market's going to give us a meaningful pullback. Maybe all we get is like a little 2 to 3% correction. Okay, which right now we had a little 3.3% correction during July 31st to August 1st. So is that it? Right? Like, is this it? That little 3.18% correction from high to low? And then we have a pullback now of like 1%. That's a 2% pullback. Is that all we do? Go down 3%, go down 2%, and the market just keeps doing this. Goes up, goes up, goes up. Does this roll over for some type of rising wedge and we fall again? I don't know. This is what we have to watch. But the longer we stay stretched here, right? The longer we stay stretched right here, the longer we haven't hit this 50-period moving average, the more I think we have to have a correction. It has gone like too long. It's gotten too many points away. Historically speaking, we rarely see the S&P get more than like 30 points above that 50-day. We rarely see the SPX get about 300 points above the 50-day. So that's why I think, if anything, we just keep an eye on this kind of noisy price action. Okay, I'll get rid of this fib for a second. But we get rid of this, high to low flush. Market kind of poked the highs, doubled out here at this resistance point. And I think now, if the bears just maintain the upper hand, they just suppress prices. So tomorrow, it's honestly, it's kind of nice that price spent the entire day going down and then pulling back, and it kind of finished totally flat on the day. Because tomorrow, if premiums I can sell and get like these highs again, these highs again, these highs again, I'll try to take the same trade that I did today, which is just a bear call spread. And if price goes down, cool. If price has to wait until Friday with Powell speaking, fine. I don't know. But I'm just going to keep measuring my levels, and implied volatility has gone up a little bit. We're at 14.3 IV rank right now. That's higher than what we've been. We've been at like 7, 8, 9 for a while. So we're getting a little bit of spike in volatility. The VIX has had a pretty decent correction today. We were up to like 17 and change. If you go to, let's say, the 15-minute. Okay, the VIX for the day started out ripping up to 17.18 and has come back all the way to the beginning. All the way to 17 and change, back all the way down to where it started. Just a huge crush in volatility again. So wild stuff, man. Like, just a noisy day, but a very tradable noisy day. And we came right back to this like positive negative gamma flip level, which is trading around 64.20 right now. I don't think the premiums are going to be great for these next 26 minutes, but I'm curious. Yeah, I mean, could I get something in like the 63.70s? Nope. Yeah, it's pretty much like it's cooked for the day. I mean, my premiums are pretty much, unless you're going like right at the money or just around the expected move, you're not going to get any premium. I'm going to hold off. I'm not going to call the top. I'm just going to let it fade. I got $100 coming in about 26 minutes. So I'll just let that close out. All right. Yeah, overall though, it's like I had a P&L pretty big swing. I was down like 10, 11 grand. Now it's up 7,000. It was, a little noise. Let's go. Jackson Hole. This will be for the daily profit plan tomorrow. Again, if you're new to this session, if you're jumping in on my YouTube session, I do a daily profit plan room every single day. This is Monday through Friday. So this is live every day, 9 a.m. Eastern time. And I run this, you can join it through, you can join this through my Telegram. You can join this, I've got an SMS alert. You can join this on my website, www.chrispulvertrading, chrispulvertrading.com. And then, so we run this in a Zoom room. So Zoom session. And I also run this on youtube.com. Put this down here. So Zoom session and youtube.com/Chris Pulver. Oops, actually, no, it's Financial Wars. Sorry. Financial Wars. Right? So I'm live every day, Monday through Friday. We're going to be live tomorrow and live on Friday. If you want to check it out, sign up for it, chrispulvertrading.com, and you can join. And you can also join through my Telegram, which I'll share at the end of today's session. Lee, good question. Lee says, will September provide the flush down we're looking for? I mean, I think that maybe August is just like the start of all the noise. I think that August right now, it's like we're starting a bunch of noise. We kind of got rattled here July 31st to August 1st. We obviously found a way to rally right back up to the highs again. I just think that, again, I'm going to try to keep it really, really simple. This was where the market kind of showed a flinch, right? It just showed a little bit of a flinch. We had a really disruptive shakeout there for a couple of days. And then the market proceeded to breach those highs briefly, right? We tested, we failed, we rolled over the trend line. And I think now I'd like to see if prices can stay below. I just want to see prices do this. There is a massive call wall at 6,500. JP Morgan for the end of September should see prices based on what they're looking at. And they hedge too, but we should see a call wall around 6,500, which means that prices shouldn't be able to sustain a close above 6,500. So I could see even this sell-off rallying back up and then selling off and rallying back up and selling off and rallying back up and selling off. And if it's a nice organized sell-off, that's fine. But we all know that's probably not going to happen. What's more likely going to happen is around Jackson Hole, super noisy and volatile around NVIDIA earnings next week, and then September, and then you got the Fed on the 17th, and it's going to be like just, wait and see, and all this caution and all this like implied volatility. The market's coiled and ready to explode, and you just have to get rid of the noise. That's why I said signal or noise. Jackson Hole, probably noise. Signal, NVIDIA earnings. Fed, September 17th, probably a signal, giving us at least the market. I just think there's good catalysts over these next couple of weeks where we're going to see some price action. We're going to see some highs and lows. I think now that we kind of, possibly peaked out around like 64.80, I'm looking to see if the market wants to continue to sell off a little bit. Okay. By the way, let me see if I can look at something maybe by the end of the week, 64.81, maybe go out to end of day Friday. That would be the 22nd. Could I sell the 64.80? I can. These are low deltas, right? I'm going to do this. I'm going to see highs. These are super low deltas. I'm going to sell like the 6,500. Let's see if this trade will offer some credit. So I go out to Friday, sell the 6,500. Can I get this trade to fill for 250 credit? Okay, right now it's a 6 delta. So it's a super low probability, it's a super high probability that this finishes out of the money. But what I don't want to accept is like, if I took the trade right now, it's only offering 25 cents. I'm not interested in 25 cents. If I'm going to get this trade to fill, then we'd have to break all-time highs again by Friday. Is Powell going to say something that's going to reassure the markets that it's all bullish right now? I mean, again, it's Jackson Hole. It could be wild and crazy. Honestly, that's probably a stupid trade. I should just take it one day at a time because it is a noisy day. Jackson Hole can be very noisy, pre-market, post-market. I'll just take it one day at a time. So never mind. I got all excited. I want to sell the highs, but yeah, I'm just going to wait. Just come join me tomorrow. Let's trade the daily profit plan. Let's get in the markets. Let's get in the trenches. I finally got, by the way, I was looking for this all morning. I finally got my Watch List Wednesday watch list. So if you'd like to take a look at my hot list here, I have 8 stocks that are ready to go. You can take a screenshot here. I will share this out. So this is a snapshot for my Watch List Wednesday. I'll post this in my Telegram. Pinch point scanner. 8 actionable stocks filtered from 9,500. I'll be pricing these out for some trade alerts. Okay, so I just posted that in Telegram. So I've got 8 stocks. I finally got it up. I've got a hopefully an infinite token now that I'm not losing access, but it should be good. So anyway, we're already in this trade. I'm already in VNOM. I think that's Venom. I'm already in that trade or pending order there. And then Campbell Soup, I think that's CPB. And I don't know the other ones, but I'll price them out, see what they do. If they look good, I'll take the trades. Pinch Point's been an awesome service. 24 winners, 5 losses. It's only been open for about a month and a half. Well, maybe 2 months. I'm trying to think when we first placed trades. We'd have been placing trades in June. So yeah, about 2 months. And 83% winners. Not bad. So the model portfolio is up over 20 grand. No complaints. And honestly, a lot of them are automatically closed out with the broker platform at 30, 40, and 50%. So it's been fun. I find trades that I never would have looked at on my own. Pinch Point Scanner gives me a great setup. I price it out, take the trade. It's been one of my more enjoyable services with something that's very easy to find. Great trades is given to me. Thanks to that Pinch Point Scanner. So good stuff. All right, let me catch up on your comments there, Lee. So September probably the flush down. I mean, I think so. September is usually pretty bearish in the market, yes. So if we go to, I've got a couple of stats here just on seasonality. So give me a second here. I'll bring up the market. Let's go here. All right, so if we look at seasonality, monthly, this is what the market is done. So the dotted line is what the market's done this year. The blue box's histogram is a 10-year average. So interestingly enough, we're going after this. Oh, that's gold. Let me go S&P. Let me go S&P. Okay, so here's your what the market's done. This is obviously the Liberation Day collapse and the market rips back like crazy. That pre-summer push, I mean, this is why we're still sustaining it, but usually there's a pretty aggressive correction coming. Like September, October is a pretty tough window, right? Usually it's like end of August, the market can kind of die off and stall, and then September, October usually is a correction. I said this in my sessions this week. If you're wondering like, well, how do you know when the market's going to correct? I don't. We never do. But usually between February to April and between August and October, those are usually the most common. Okay, so seasonal correction windows for stocks, okay, or indexes. So if the S&P is going to correct, this is usually when we see those windows happen. Between February, April, August, October. Does that mean we shouldn't trade those months? Of course not. You always want to stay in the markets. It's just manage risk, expect some downside, play the game, modify your strategies, right? Think about some different strategies that help you mitigate some risk. You know, you can take advantage of some short-term bearish opportunities. You can take advantage of short-term correction opportunities. More importantly, is just managing risk to make sure you're not caught off guard. I mean, a simple trade is like buying a put on your own positions, setting up a collar trade, have downside protection if the market's going to not cooperate, right? But that's usually what I see, okay? So we are looking at right now, you know, in true form, this was down through April. Okay. March was down, April was down. And April, by the way, was that huge 15% decline that came back up to minus 1.5. May was a ripper month. It was like one of the best performing months ever in the S&P for May. June was more of the same. July was more of the same. August, surprisingly, has been outpacing. I mean, it's just crazy that August has been like that solid of a month. But if we're starting to roll over, it's like coming into September and October, it's usually not all sunshine and rainbows. Like the market's going to have some type of seasonal lull or some type of seasonal pullback. You know, and what is lining up here? What's lining up? Well, we've got Jackson Hole for 2 days. Okay, we have NVIDIA earnings next week. We will have the rounds of September data, which would be U.S. non-farm payroll. We will have U.S. inflation with CPI and PPI. And then we also have the September FOMC. rate cut. Okay. This is all happening within the next 30 days. Okay. It might not seem like a lot, but it kind of is. I think there's a lot riding on all of these things. Jackson Hole can be noisy because of the timing of it being this week and kind of being like August and summertime, but it could set the stage for like maybe forward guidance on the Fed. Are they going to aggressively cut rates? Are they going to stay the course and just do 25 basis points? Will they cut September, October, December? Will they cut just once this year? Does the market like what they say, not like what they say? I don't know. So it's kind of wait and see, unfortunately. NVIDIA earnings, big one next week. It's like 8% of the entire S&P market cap at $4.2 trillion. Earnings, whether they blow out expectations or they don't, it's priced to perfection nearly. I think it has the ability to move the market, like I said, anywhere between like 0.5% to maybe even 2% if the market goes nuts, one way or the other, like good or bad. Non-farm payroll should be that first part of September. I think next week on the 29th, we're going to finish out the month and then we go into like September. So it's going to be like that next Friday. But U.S. non-farm payroll, this is what started to get Trump was talking loud, Bessent was talking loud. All this was about if U.S. job is like the job market is slowing. Unemployment rate is still historically low at 4.1%. But what if it starts to go higher? Right? What if we go from a 4.1 to 4.2? What if we go from 4.1 to 4.2, 4.3? Does that matter? What about unemployment claims? What's the status of the labor market? What we have seen on a negative side is lots and lots of terrible revisions, right? It says we print 100,000 jobs and then they're revised down to like nothing. We have 170,000 jobs. They're revised down to like, 140, 130, 120. It's like we're shaving the jobs we say that we have. And the only jobs we've been having growth-wise has been in service and in healthcare. That's it. We don't have government jobs right now because of Doge. And we don't have tech jobs because no tech is hiring. They're just not hiring. And then you have inflation data, which right now I'm watching on Trueflation. We're back up to like 2%. It's pretty elevated. We've seen CPI tick up. We've seen PPI tick up. Wholesalers and producers are potentially passing on the cost to consumers. Now, the argument is it going to be a permanent price hike or is it going to be a one-time transitory price hike? The argument is that it's temporary. That is transitory. Don't use that word though. Don't use transitory because that was a terrible taboo word from the Fed a couple of years ago. But if it's just like a one-time inflation hike, we're kind of navigating it already, and that maybe it doesn't get worse. But markets will react to it. And then September FOMC, it's about an 84% chance the Fed's going to cut. It's what's priced in right now. I don't see that changing dramatically to get less than 50-50. I think it's going to be priced in. But there's always that angle. Is it a hawkish cut? Where it's like they don't want to cut, but they're going to. To the chagrin of the Fed, are they going to cut because they feel like they have to? Right? Just to appease the markets, just to appease Trump and have less noise and less trolling, right? But really, it's if they cut in September, are they also cutting in October and also in December? If Powell steps down at the end of his tenure in 2026, like I think it's March or May of 2026, does the new Fed chair just like, is he carrying the torch for Powell or is he like pro-Trump and cut rates and be something that's terribly dovish and just a giant sycophant? Maybe. I don't know. But I don't think the markets are going to love just like crazy dovishness if we start to see stickier, higher inflation. It's just all the things that matter. And maybe it matters, maybe it doesn't. I say this, I'm still pretty bullish in the market. I'm just looking for dips. If we get dips, I'm kind of interested in buying them, right? I just want to give myself some margin for error. So I did have a great class today in my waterfall income. We had a nice lengthy like day 2 note section. We talked about a pretty advanced strategy today. We have, I think 4 trades running now that are utilizing the strategy. Basically it's this, I'm willing to give myself anywhere between like a 10 to 15% buffer to be wrong before I take on any risk. And I can still generate really consistent income. So that's what I like to do. It also gives me like potential profit trap. I also can repair my trades with owning the underlying. So when I trade the SPY or the Qs, I can flip those trades. For example, I took like a $330 loss in December, and that trade right now is sitting on about $5,400 of profit, and I'm going to keep rolling it to make more money. So hopefully I can keep rolling and rolling and rolling, and maybe that $300 loss is going to turn into like $6,000 or $7,000 or $8,000 of profit. It's a lot better than taking a loss, and sitting in that loss like, oh man, that loss sucked. Well, I can repair it and make thousands of dollars. So that's honestly, it's a beautiful thing about trading options. You have a plan B, you got a backup plan, and if you got the cash to hold some positions, you can repair them. Okay. All right. So interesting day. I mean, the market here is bouncing off the daily 21 period. That's right here. This moving average is 21 period. So the market, maybe was excited about finding it. I still don't think it's a buy signal. I don't. I'm going to try to do what I did these last couple of weeks, which was I'm selling. It's done pretty well so far. Of all these last 3-4 weeks of trading, I've only taken one loss. It was right there with CPI closing out at the top of the day. Everything else I just sold for the day and made pretty good profit. Today I sold for the day and made pretty good profit. That's what I'm going to keep doing it. Okay. All right. Fed divided according to the headline. Seems like rate cuts are further away. I don't think so. I mean, this is, if the Fed is truly, if they're really watching inflation closely and everything else that they have to balance with their mandates, I mean, we have sticky inflation. The scary thing is there's no reason for the Fed to be cutting rates if inflation is spiking. Okay. But inflation from this high, this low, if it just kind of settles in, right? And the market can absorb a lot of things. The market can absorb lots of changes in prices. The markets can absorb, pretty much anything that's not surprising. If the market thinks there's going to be inflation, well, then companies adjust their cycles and they buy things up front. They try to front run the cost of inflation, right? But if it's this knee-jerk shock that nobody saw coming, that's when the markets reflect wild and crazy price action. So I mean, if the inflation rates are not going way higher, then I think it's appropriate that the Fed is willing to cut. I mean, I do have a chart on here, I think it's a core PCE. Is it this one? Nope. This one. Darn it. I know it's one of these things. Index. There it is. Okay. So the Fed funds rate, which hasn't budged since when? When's the last time we actually cut rates? Last September. We did September to December. We cut 100 basis points, right? In 2024. Markets, I mean, we're at all-time highs again, right? Liberation Day had nothing to do with rate cuts. Markets absorbed it pretty well. We didn't really have any knee-jerk reactions at all, in fact. But the Fed funds rate at 4.25, 4.5 compared to the core PCE, which is supposed to be the Fed's primary gauge of inflation, we're down to 2.8. So there is a buffer to cut, right? We can cut, we can cut 1% and still considered restrictive. But what we don't want to see is the Fed do this. We don't want to see the Fed funds rate go down and then core PCE going higher. That's what we don't want. Okay. So time will tell. When are these data points, by the way? This is June. That was May. I guess this is monthly. So 2.8. Okay. So it went from 2.6 to 2.8. But considering where we are on the interest rates, is we're still restrictive. However, I will say that probably the most important chart to determine whether or not rate cuts are going to be good or not is going to be this chart right here. This is the US 10-year yield, okay? This is what told us that cutting rates in 2022 didn't freaking matter. Because right here, this rate of change going from the low before we had a rate cut cycle in September all the way up here. Okay, do you remember what I said? The Fed cut 100 basis points. Okay, the Fed cut 100 basis points. And this market rallied 117 basis points. If there is something similar to that happening this next cycle, where we cut September, we cut October, we cut December, we cut in January and March of next year, we have 4 or 5 rate cuts coming in these next 6 to 9 months. If we cut and the yield market goes back up, that is not a good thing. So what does the market want to see? We're going to want to see that the rate yields can come down. So to me, this is good for the global economy, and this is bad for the global economy. Right? I think this is the most important thing to watch through September to December. If you want to see all-time highs in the stock market, you do not want to see yields going higher, because this is the long end of the curve, not the short end of the curve. What the Fed is controlling right now, what the Fed would be cutting right now, would be the short end of the curve, not the long end. Trump has been vocal about cut rates, cut rates, cut rates. What he's not giving credit to is that it doesn't matter. If they cut rates right now and only cut on the short end of the curve, it doesn't help this market. It doesn't help you buy a house cheaper. It doesn't help you buy a car cheaper. It doesn't help you refinance debt cheaper. It's not going to get cheaper. Okay? So if we see yields going down, that would be good. The consumer and businesses need a break, because otherwise you have a frozen housing market and you have people that are starting to spend their changing habits to make sure they're not going to go broke or get into some trouble. But if it goes higher, meaning we cut by 100 basis points again, and the market yields go higher, that's not a good thing. I can't imagine this would be good for the markets. And how quickly it gets there is whether or not we determine the market's going, aggressively up or aggressively down. If we change like we did here when we had that crazy whipsaw during the basis trade, like the basis trade blowout right here, that type of rate of change that's so aggressive, that's what rattles the markets and shocks the credit side of things. Okay. So anyway, I think this is, it's a super boring chart, and maybe nothing happens, right? Maybe this is all we have. It's just a bunch of sideways yields and nothing really goes. I don't really know how you would trade this per se, right? But it's just, if I see the market, if the yields go higher, I'm probably looking at a down market. So I would say, bearish market if we're going up in yields, okay? Or I would say bullish market if we're going down in yields. Now, bullish has a caveat, because if we go down in yields, the question is, are we going down in yields because it's so deflationary that, like we saw here, rates came down, yields came down, but the market also dropped 20 to 25%. So be careful what you wish for. Like, we might see an opportunity to be more bullish, meaning that the markets can flush out, get off these all-time highs, have a 10, 15, 20% correction, and then we can see a nice opportunity to buy some dips. Okay? Or is it, we just melt up higher, yields go up, assets go higher, you got to stave off inflation, and we just reach a bubble point, and then we break and we roll over, and it's going to be like a nasty bear market. I don't know. And I don't know, and I don't care, because it's silly to be a bear. And if you're buying these highs, I think you're an idiot too. It's like, give us a pullback, give us some real trading, give us some dips and retracements, then we can take some opportunities. I'm not a bear because I don't think it's going to be sustainable. You get a correction, the market's going to buy the dip, right? But if I'm bullish at all-time highs, I'm not. I think it's ridiculous right now to be buying things that have ripped over 100% in 3 or 4 months, right? The S&P right now is up around 7 to 8% for the entire year, historically averaging about 7 to 8% for the entire year. So I don't know if the S&P can go 15% for the year, go 20% for the year. If it does, it probably has to have some type of correction first to have that reflexive bounce to give it some, more of a thrust and trajectory to the upside. But if we close out for another 20% this year, that'd be 3 consecutive years at 20+% gains. I don't know if that's ever happened. Okay. It's a lot to ask for. We're trading at pretty high valuations. We're trading at pretty high multiples. We're super concentrated in tech. Okay. I just think there's some really, really big swings that the market might throw us into, that if you're not managing risk, I think you could have some wild and crazy trades ahead. So anyway, all right. Well, looks like my daily profit play. Okay. So I got out of the bear call spread. The iron condors are profitable. All good on the day. 3 for 3. That's fine. And all good. So taking the bucks, price did what we needed to do. It was in between our levels. Tomorrow's a new day. We'll come back and grind for the daily profit plan. And I'll get rid of my lines. Pay attention, pay attention, pay attention. There we go. So we'll see what tomorrow brings. Jackson Hole day 1, day 2. Powell's comments on the calendar is out to Friday. So tomorrow, PMI numbers in the morning coming out at 8:30. That's unemployment claims, 9:45 PMI. This might also be another reason to be careful on trading with me tomorrow. Like, I'm going to be a little bit cautious. We got PMI at 9:45. It shouldn't matter a ton, but I'll probably just set my orders up and get some levels calculated. The VIX, crazy ride for the VIX today. It was up like 8 or 9%. VIX was up 10% and gave it all back. Right? It's a lot of volatility, man. So anyway, there's the yields. Where are we at for the day? We're nowhere. We're in fact, over the last 1, 2, 3, 4 weeks, the market hasn't gone anywhere. We established a high here. We established a low here. The market breached the highs for a second, for literally 1, 2, 3 days, and then we're right back down into this range. I think this is a range, and if we're lucky, it's like we have a little bit of this, and maybe we have a little bit of this. So the market could maybe roll over a little bit deeper, right? But it might take some time. It might not be perfectly on Jackson Hole, or it might not be with NVIDIA next week. It might wait until the Fed in September. So I'm just going to approach it kind of one day at a time. And that's a beautiful thing, is we just trade for the day, trade to win the day, and don't have to worry about anything else. Watch this Wednesday. I'll focus on this tomorrow. I know tomorrow's going to be trading Thursday, but watch this Wednesday. I want to get back to it because I lost my scanner today. So I've got the scanner back up and running. I shared that in Telegram. We'll talk about these and price these out tomorrow. Maybe I can find a couple trades for my pinch point service. Okay. Any final questions for me? Waterfall income. I'll just highlight a couple of things here. Waterfall income. Tomorrow is going to be day 3 of our masterclass workshop. We did day 1 on Tuesday, day 2 today. The recordings will be posted. They are worth a watch for sure. We essentially are discussing and deconstructing our core strategy and our advanced strategy. Pinch point, I'll hopefully price out some trades tomorrow and find a winner. Daily profit play, come and grind with me every single day. Newsbreakers, NVIDIA is really the only thing lined up for next week. I'm gonna pause this one for a couple weeks. Hedging, I've got some October hedges that I think might be interesting, some December hedges that might be interesting, and then project options hedge. We just have some trades running, a bunch of trades running, and then some good education. So anyway, final notes for the day. Services available. If you want to see for more information, you can go to my website, chrispulvertrading.com. You can join my daily profit plan from there. Here's the website, chrispulvertrading.com, and check out Daily Profit Room. So you can sign up here, subscribe. This will get you linked up for my Telegram. I stream on Facebook and YouTube and Twitter and things like that. X, Daily Profit Play, Double Up Alerts, Newsbreakers, Pinch Point Scanner, Waterfall Income. Okay, you want to join me daily Profit Room, join me right here, 9 a.m. weekdays, Monday through Friday. Okay, what do we do? This is what we do. We grind every day. Cool. All right, thanks for being with me. Final hour sesh. We'll come back and grind again tomorrow. Have a good rest of your day, and I'll see you soon. Thanks, bye.